I discovered the easiest liquidity trading strategy that will instantly print you money. And in this video, we will not only dive into it, but also go over step-by-step examples so you can start winning trades today. The first step of this strategy is identifying market structure. So there are three ways that the market moves. We are either in an uptrend where we are making higher highs and higher lows, a downtrend where we are making lower lows and lower highs, or we are inside of a range where we are making equal highs and also equal lows. We always want to trade with the higher time frame market structure. This means the 1 hour or the 4 hour. So here I have an example of GBP/USD inside of a downtrend. As you can see, we are making lower lows and also higher lows. Each time price dips down, it's called a lower low. Every time price then moves back up, it is still called a higher low because we just didn't start going bullish. Now here is an example of an uptrend, which is the opposite of the downtrend, where we are making higher highs and also higher lows. And here is an example of a range where we are making equal highs and also equal lows. Here we mainly made equal lows, but you can see that we are bouncing back and forth between support and resistance. Now inside of this strategy, we mainly want to focus on uptrends and also downtrends on the higher time frame. Now step 2 of this strategy is identifying where liquidity is at. The main liquidity that we will be paying attention to is session based liquidity, that being our Asian high and low and also our London high and low. Asian session occurs from around 5 p.m. to 1:45 a.m. Central Time, and London session occurs around 2 a.m. to around 6:45 a.m. Central Time. We want to go to the 15-minute time frame to mark off our sessions. Liquidity is important because it acts as a magnet for price. Most days the same levels are being tested. As retail traders, we can use this to our advantage. Now here I have gold. I have both the Asian high and low marked off and also the London high and low. Now instead of doing this, what you can do is go to indicators and type in sessions. Once you have your sessions pulled up, it will automatically adjust to your time zone based off of the different sessions. Our white being Asia, the yellow being London, and then the rest being New York. Now during London session, we will usually see a manipulation of Asia. All a manipulation is that we are either taking out the highs or the lows and rejecting and going inside of the other direction. So here we can see that once we took out Asian high, we started to reject a little bit, but not all of the way. Now sometimes during New York, we can see a manipulation of both London low and Asian low at the same time. Usually New York only takes out London, but sometimes it could take out both Asian and London low. So as we see with this candlestick right here, we took out both of the lows and then we rejected all the way back up here. See, this wick is very important because price came down to test and it couldn't keep selling anymore. We came back up and we started buying for basically the rest of the day. Now one of the reasons why during London, once we took out Asia, we just didn't start falling is because of our higher time frame order flow. Gold in general has been extremely bullish. So why sell after this liquidity sweep when we can be in line with the higher time frame? Now here is another example of this happening. So we have The white being Asia, yellow London, then New York. During London, as soon as London opens, we can see that price is already targeting Asian high. We take out Asian high, we reject for a little bit right here, but overall we keep that bullish structure. Now here is another example of this happening. This one is New York. So during New York, we can see that price took out London low right here. Then we see rejection. We take out London high as well. And then we just keep on going for the rest of the day. As soon as the session starts, you want to see that where you're targeting is still intact. So on this day, London high was still intact when New York started. So if I am bullish, I'm looking for us to go straight to take out the highs. Here is another clean example. We have Asia right here. During London, we see the manipulation of Asian high. And then we see that the rest of the day, we just sold all the way off until we take out everything. Here is yet another example. During Asia, we are consolidating. Then during London, we manipulate, but we don't really reject fully until the end of the session. And then we start rejecting for the rest of the day. Now here is another example. So we see that price opens up during New York, and then as soon as New York opens, we target London low. We don't even take out London high, we just go straight for London low, and price immediately takes it out. Now before we get back into the video, I just wanted to let you guys know we do have a free Discord community where I will be doing a free giveaway of a prize worth of $500 once we hit 1,000 members and 10 people inside of VIP. To increase your odds of winning, just make sure to be subscribed to our YouTube channel, leave a like, and also comment on one of our videos. Inside of our free community, I give out free signals shown all here, and I plan to go even crazier in 2025. We also have Ant. He also gives out signals as well and trade analysis, and he's been going crazy too. He hit a 32R today. So these are just, the type of things you can see inside of this trading Discord. You'll also be able to see my stock analysis as well, because I do trade stocks and shares too. And then as well, it's just a community where you can ask questions, become better, learn, and all that good stuff as well. So if that interests you, the link is inside of the description, and I'll see you guys in there. So now that you understand liquidity and the different ways that it could be taken out during the session, next we will look for supply and demand. We're going to combine both liquidity and supply and demand together. So supply is basically a large order flow of selling candlesticks. We then want to see price come back to that zone and see further selling off. While demand is the exact opposite. We see a large inflow of buying candlesticks, and we want to see price return back to where that buying started for buyers to get back in and push price further. We draw our supply and demand zones on the 15-minute time frame to the 4-hour time frame. The higher the time frame, usually the more reliable the actual zone is. Now we're going to go over some examples of just pure supply and demand zones so you guys can know what a proper supply or demand zone is. We always want to look for our higher time frame structures first of all. So we can see gold is extremely bullish. This zone right here that I had marked off on my PowerPoint would be a good demand zone. It is on the 1-hour time frame. We can see here that there was a lot of buying and price came back. This zone right here is a very good demand zone as well. When you're looking for demand zones as well, you also want to look for something very important, which is a break of structure. Break of structures are important because it shows that buyers were strong enough to push past previous resistance and keep that order flow bullish. Now when we're talking about supply zones, this would be a good example of a supply zone. We see that big seller's push, it broke below this structure right here, and then we see price come back to this zone, and then we start to sell off. Now the step 4 of this strategy is understanding time. We only want to be trading during the beginning hour of the session opening. So if we are trading New York session, we mainly only want to be trading from about 7 to around 8 to 8:30. Same thing with London session, we only want to be trading around 2 to around 3 to 3:30. Well, now why do we only want to be trading the session opening? The session opening is when there is the most amount of volume and manipulation and price discovery inside of the day. There is a lot of inefficiency happening during that time, so we can take a lot of an advantage of that happening. Now the last part of this overall strategy is understanding your entry models, which will be a break of candlestick for us. Now you have probably seen bullish engulfing and bearish engulfing. These are very common candlestick patterns, and it's also very simple. So once all of our steps are put together, I'm going to show you guys, but our last step, we just want to see a candlestick that engulfs another one before getting inside of the trade. This shows signs of further bullish or bearishness in the direction we want to go inside. So if I'm bullish, I just want to see a bullish engulfing of this last candlestick, and if I'm bearish, I want to see the opposite. I don't wait for the close of the candlestick when it's happening live. I just look for the candlestick to engulf. Now here is that same trade example that I've shown you guys. So simply, once I get the tap of my demand zone, which is right here, all I want to be paying attention to is that next candlestick. Since I am bullish, I'm looking for a bullish engulfing on my 15-minute time frame. Now you can also do this on the 5-minute time frame, and sometimes I do go lower to the 5-minute for more refinement. 15-minute or 5-minute is fine. So here we see that this candlestick right here was our engulfing candlestick inside of the direction we want to go. We put our stop loss right below the last candlestick, and then we just aim for higher. When put all of this together, it makes a very simple but very efficient model. Now for this example, we have a 1 hour demand zone. We broke above this little structure right here. We come back to the zone, we reject, and then we have this bullish candlestick right here. Stop loss goes right under the last candlestick, and then we aim for higher. Now let's combine everything together that we've learned today so that we can create a very efficient model. All these things are good on their own, and now that you understand them, you could put them all together fluidly so you can understand how to execute this strategy real time. Now first I'll show you it on the model example I've been using, and then we're gonna go over some other examples as well. So coming into the day, what do I do again? I'm looking for a higher time frame market structure, higher lows, and also higher highs. Once I have our direction established, I then go to the lower time frames, and I'm looking for liquidity. Asian session high and low, London session high and low. Next, I look for my supply and demand zones. On this day specifically, during this time, I saw that we had a very clear 1 hour demand zone. I'm specifically looking at London high not being taken out because I specifically trade New York. So New York session opens up, London high is still intact. I wait. Price finally taps into my zone, and the only last thing here to wait for now is a break of. We go to the 5-minute time frame. Our entry is right here. Candlestick comes above this one bullish. Now this is an example on GU. This is a trade that I had called out on Monday. This blue box is my 4 hour zone. So first order flow was selling off. We've been selling off on GU for a minute. So come into the day, what do we see first? Asia's already been taken out. I'm paying attention to Asia low though. I see during London, we had already manipulated Asia. I'm waiting until New York to either see a manipulation of London high. I put my stop loss right here. We wait until that break of candlestick entry. We get in right here and I hold targeting London low. In this example, we do not come all the way down to London low, but we still end up catching a huge portion of the move, and with the right trade management we could have taken partials or a lot of this position off and still made money, even though we weren't all the way Now here is another example happening on the Dow. Now today is the 13th and I want to show you guys sort of like a live example. I did not take this trade, but I just wanted to show you guys. So first, we always start off with market structure. Next, we go to the lower time frames and we look at where liquidity is resting at. So we have both the Asian high and Asian low, London high and also London low. We see that Asia has already been taken out and London low is still intact. We have not taken it out yet. So we wait now and look for our supply zones, because now the reason I did not take this trade is mainly because it was a little bit more outside of my time window. Remember how I said you normally want to wait 1 hour after the open. The open was at 8:30. This trade didn't start until like 10 o'clock. So I didn't really want to get inside of this. Plus it's Monday and I don't really like trading Mondays as well. So we wait though until price comes to the supply zone and then we wait for the break of candlestick. This right here would not have been the break. We wicked back up. You really want to see that candlestick engulf the other candlestick fully, like this candlestick right here. We wait for that break of candlestick. Right now, if we were in this trade, we would be up 1.5 R. I usually take partials around a 1 to 3 or levels of liquidity. So this is just an example of this model. Another example I just want to show you guys live. So if you guys enjoyed the video, make sure to like, comment, and also subscribe for more. I will be coming out with more in-depth videos on liquidity sweeps, where liquidity is at, and different types of strategies, and also risk and trade management protocols as well. So I hope you guys enjoyed. Also have a really good trading week, and tell me how the strategy works for you inside of the comments.